Corner. I'm Lisa, and today we are talking about the most useful kind of debt fund scheme which you can invest in. This is called the liquid fund, and it includes the overnight fund and the liquid fund. Now, before we get into why this is useful and how you can actually put it to use, let's refresh our memory with what a liquid fund scheme really is. Just like other mutual fund schemes, liquid funds are also a portfolio of securities. These securities include debt and money market securities of very low maturities, anywhere between 0 days to, or rather 1 day to 91 days. Overnight funds actually have securities with only 1 day maturity. Now, it is the low maturity of these debt and money market securities which make liquid funds a very stable return and low risk kind of investment option. So why are these debt funds useful to you? Why are liquid funds so useful? Well, they do three things. Firstly, they help you save. Any excess money lying in your bank can easily be moved to a liquid fund, and it will help you not spend that excess lying in your bank account, firstly, and secondly, earn a slightly higher, more tax efficient return. Secondly, liquid funds help you with the safety of capital. It gives you a stable return, and the low maturity, like we said, reduces risk, so you can be secure about the capital that you've invested in it. Thirdly, liquid funds are extremely flexible. You can invest your money and withdraw at a day's notice. So those are the reasons why liquid funds are really, really useful. Now, how can we actually use them? Well, let's talk about a few uses of liquid funds. Firstly, it can help you build a very effective emergency fund. What is an emergency fund? It is like a basket of money that you have put aside in a safe return product, which can help you in case an unforeseen event happens. Unforeseen events do happen. You could have an accident, you could lose your job, or maybe your parents or relatives or friends need money urgently. For all of those things, you need to have some liquid money kept aside. If it is in your bank account, you risk the sort of temptation to spend it. If it is in your long-term investments, you really don't want to take out from your retirement fund or your children's education fund to give to your relative, or for the car accident, or if you lose your job, on your daily expenses. So liquid funds can help you put aside money in a safe, secure product which you can access at any time. Money is available within a day's notice. In fact, some liquid funds give you the facility of getting money in your account within half an hour. A limited portion, but nevertheless, you can access it like that as well. Secondly, if you're a stock market trader, you can actually move the excess money which you're not investing right now into a liquid fund till you are ready to deploy it into the stock market. So they are again safe and secure version, and you can take money out at a day's notice and buy your stocks whenever you need to. There is a version of liquid funds called liquid Bs, which are listed on stock exchanges, and those can also be a very efficient way to manage your stock trading margin. Now, remember one thing though, do not use liquid funds to earn returns. That is not their purpose, because as soon as liquid funds will start giving you a very high return or higher than expected return, you know that risk is also going up. Now, how can you choose a liquid fund? How do you know which one to invest in? Well, the capital markets regulator, SEBI, has actually come out with several regulations around liquid funds, which have made most of these portfolios quite standardized, and hence, investor interest is protected. So there's not much differentiation. Also, remember, we are not seeking returns. So the differentiation really, what you need to look for is in quality. So that is the first thing. Look for the quality of the portfolio in the credit rating section. Now, remember, we said there are debt and money market securities, there are commercial papers, there are sovereign papers. Now, other than sovereign, which will be labeled as SOV, all the other securities in the liquid fund portfolio should be either A1 plus or AAA rated. These will show you that they are the best quality papers, which means the risk of default is really, really low. Also, make sure that the portfolio is adequately diversified. So no one commercial paper or debt security has more than, say, 4-5% invested in it. Only the sovereign papers, the government securities, may have 8 or 10% or more than that, because those can be, bonds issued by the government, and you can have a slightly higher allocation because you need slightly larger corpus to invest in these bonds at times. So check for the portfolio quality, check for the diversification, check for cost. Again, cost is not a major differentiator, but liquid funds also come at varying costs. Ideally, anything more than 10 to 12 basis points or 10 to 12 paisa per 100 rupees on an annual basis is not required. Pick a liquid fund which is within that. And lastly, if you want to look at, then look at the AUM, okay, because you don't want something very small size. Anything above 500 crores should be good enough. Now, if you're biased towards a particular brand of mutual fund scheme, just make sure that the portfolio quality, the cost and the AUM is tick marked as we just spoke, and then you can go ahead. Also, let me say that while liquid funds are really flexible and you can exit at any point in time, exits before 7 days have an exit load, a very small kind of penalty if you need to withdraw before 7 days. But again, this is standardized across liquid fund schemes, so there's not much difference, but you should be aware of it. Now, once you have all this tick marked, you will realize that liquid funds actually play a very important role in money that's required in the interim, money that you need to keep aside for 2-3 months or 6 months, or maybe it remains lying in a liquid fund for a year. They are tax efficient, they are safe and secure, and they are flexible, and that really helps. So I hope now you know a little bit more about liquid funds and you will be able to use them efficiently. And I hope that this video was as useful to you as liquid funds will be. Thank you for watching. I'm Lisa.